The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. This is the Friday, August the 1st edition of the Tiger Technicians Hour. And of course, we're going to be doing Chapman wave methodology in detail. I'm hoping to do a webinar very soon just to go through these things, kind of a refresh for my subscribers. Although today, after the close, I'll do my usual hour and a half, whatever it is, video overview, where we are, what we are thinking. So this is what I've been talking about for a long time. Let me just run the numbers first, and then I can go into detail. INDU. The Dow right now is down huge from the 45,016 peak. D, remember in the Chapman wave methodology, we use the Chapman wave count, start from an identifiable low, count each successively higher peak, alphabetize all the way, and using uppercase on the way up, A, B, C, D, where D's where other things can happen, but it can still go to E, F, G. There's never an H, so you have to look back to see whether there was an alternate count. And on the way down, it's lowercase, but the upgrading of a buy signal to a buy mode, usually at a leg B, tells you that there should be at least 4 higher peaks to come. So I don't want to get too carried away here, because at that D, other things can happen. Well, look at this peak D right here. It went to a peak D at 45,016 on the 23rd of July and turned down yesterday before the open. We went rather aggressively short, and that so far has worked quite nicely. What I'd said was the 44,200, and I spent the whole week talking about this, that the 44,200 to 44,000 level was really important to hold in the short term. Okay, so that's done. What I said was, I'm a very visual person. So this, like the other day when I'm playing tennis, there was the ball, it was a lob that came in, and instead of just either lobbing back or hitting it kind of in the middle, I used a technique that I've always loved. I just love the feeling of it. I love the synchronicity of everything. In rugby, we used to call it a drop kick. It's where you drop the ball, and as you drop the ball, you kick it. Everything's really quick. Why? Because the speed of the bounce or the forward motion coming towards you gets exacerbated by the push back. So I did that, and I was really, besides the lousy shots that I did, that was just a great one, great feeling. But it's this drop kick, and the drop kick is right here in the weekly chart. And what I said is that I see a pattern that I've witnessed many times before. A lot of the time it's on the upside, and I spoke about June very often. It's not always June, but I remember many Junes where the price of whatever it was coming down sharply, and the monthly chart looked like, oh my, this is going to be horrible. And then out of the blue, like a day before or the day of, the final day of the month, the price soars up. And I said, I've seen the same thing on the opposite side. And I'm anticipating that as we get into Wednesday, it doesn't matter that it's the Fed, but that could be the trigger to do it. But Wednesday, we start to see a deterioration, and that maybe Thursday going into Friday, where the first of the month has already begun. Usually, for a long time, we've had the end of the month or the end of the week is actually the last day is Friday. This time, the first of the month is Friday. So I said, in this case, we're going to have to see something where the weekly candle really deteriorates, and then the following candle confirms that there's this arching over, and it's like this drop kick, because it happens right at the moment where it looks like this is fantastic action, and then out of the blue it is unfantastic action. Well, that's exactly what we got here. That 45,016 high that we saw this past week, that actually was a lower high. No, it was the week before, the high of 40. So that was 44,946 this week, and that, yes, that's right, because it was the previous week. Good. So what we've got now is the candle that I was anticipating is working on the first of the month. Let's look at the S&P, and we'll see the same thing here as some visual. So this one says, hey, what are you talking about? This is still only leg C. as I see it, wow, could be completely wrong. The top that we just made, and it's been rotating, when tops are rotational, very often they don't occur exactly on the same day. Bottoms do, but this is different. And then there's a whole thing that I'll talk about when tops occur synchronicity within a bar or two. That's something else. But right here, we've got the S&P making a 6427.02 high. I sent out an update yesterday. I usually don't send updates, but I did, for us to go short the S&P again. And this one has worked quite nicely so far. And look at this. So you've got this is the first time you can say it's a peak E, because today was a lower high. But that's still a leg C. It means all of next week, if there's no high above 6427.02, that'll be a peak C. All right. So, and the monthly chart is still in the G/A. Well, I have to go through a bunch of things for you with monthly charts, but let's do that next week. I don't want to waste time. Look at the QQQ. High yesterday, all-time high, 574.63. Closes at the low. Look at this 9-period moving average. It is still positive with such a sharp move from 574. Today's low is already 551. I mean, that's massive. Look, it took out almost 2 weeks worth of trading, right? But the weekly chart is in leg B, so you have to wait for a lower high next week. And the technicals are looking great. And what I had said was the length of time, I'm going to, as I said, I'll have a webinar on this. The length of time that the stochastic was holding beautifully in the high 80s, and in some cases in the mid 90s or higher, says that at some point when that stochastic starts to go down under 80%, and right now it is at 68%, together with the MACD declining, that's one thing. But if it happens together with the 9-period moving average crossing negatively, and as I said, the 9 is still way above the 14, so you're going to have to go even down to the 550 or lower level with that 9-period moving average to turn down. I'm going to do this right away because I had a question and I have to get to it immediately because it's a 1-minute chart. Yes, I don't want to go into it right now. It's a little bit elaborate. I use measured moves here after that peak G top that we made around about 3 o'clock yesterday. 3 o'clock. No, last night it was peak G. And then what happened was I used this left side, right side price time match to a particular candle, and it had it coming in right here in the 10-minute E-mini chart at 840. Well, the measured move, it was still quite a bit higher than that. And then it turned around and made this peak B minus, and we plummeted from this last high at 850 of 63.31 down, and I had a measured move going down to right there, and that would have been the 62.50s. Well, what happened is it went down below it, and now it's trying to bounce. So now we're getting close to the 10-20 time frame where new participants in the market come in, and my anticipation is from this doji candle low that was made right here at 10:03. This is where the first attempt at a bounce. This is a peak B in the 1-minute chart, a leg A in the 5-minute chart, and a leg A in the 10. This is the first attempt. Unless we can get to 62, over 62.96, the 200-period moving average in the 1-minute chart, this is just the first attempt after a massive sell-off. I'll be right back. Dow's down 626.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Hi, folks. So I had a question. I'm going to get to it right away because it's really pertinent. So in the tag YouTube question is, market down, nail, N-A-I-L, and nail, that's really the building industry. ETF is up, anticipating lower rates. Buy now. So let me show you something. What happens in a market that is changing course, and we still don't know really. I mean, it looks like it. Everything looks like it, right? But you never know. My suspicion is that we have changed course. We changed course as the market turned yesterday. But most importantly, the problem is, now I'm just showing you, this is, I don't know why I have to redo these charts. It's just pathetic. When I had to shut down suddenly, I did everything right, and then I had to shut down. I lost all this data. When I came back, it should have been there. I don't know how many times over the years I've done the XLB, which is a select materials spider fund. Look, it made a peak D and then a peak E in the monthly chart. It's made a peak D in the daily, and it's pulling back very sharply. And even if I do it, I'll just do this quickly. So that's A, B, C, D, instant restart, A, B, C, D, and then an A, B, C, another D. Good grief, how many Ds? And a double top right there at 92, and it's down $1.23 at 86.47, down 1.4%. But so the issue here is XLB. Now, what am I going to go to? I'm going to go to the home builders, HGX. So look, here's the HGX, and that is up 8.92 at 680. So nail, I probably lost all the information here as well. No, I've got it. DX home builders suppliers, 3 times bull. Now, in this particular instance, I'd be very hesitant to go 3 times long. Now, there isn't very much to actually to be in the same situation 1-to-1. This is what I'm going to say to you. If you're looking at a long-term position, I can't give you the go-ahead, because even the home builders, even if rates come down and there are fewer jobs it's going to make it difficult for the home builders home builders need buyers, and buyers need confidence. And this could be a point where there's a little bit of hesitancy in terms of the buying. So that's what I'm a little concerned about. I'll tell you what I would do. Why don't you start? All I'm saying is that A, B. This could be an F/B. I'm calling this, I would have normally called this an F right here. I would have thought that it could be an alternate count, but I could always start the count here because the 9-period moving average did not go pink. So that looks like a continuation pattern. And it's just a tiny leg A, a peak B, B, C, and D in the weekly chart, still way under the 78.52 200-period moving average number at 61. So I'm going to suggest that you get your foot in the door. But please, I can't... Let me just do this and I'll show you something very interesting. The TLT, and I haven't done all the numbers on everything for this. I did it in the update, but I haven't done it now. Is in a strong leg C. In other words, but it's still only in a rectangle at the bottom here, and the monthly chart still is absolutely terrible. That is the Treasury, 20-year Treasury bond ETF. Look at the TBT, which is the inverse. That's down under the 200-period moving average, and absolutely on a weekly basis, because this is under the major high, you can have a failure at this peak C. I'm thinking, yeah, you're right. I think yields are coming down. I mean, I don't know what Powell's going to do, but he's going to have to say something, right? So yields are coming down. So you're absolutely correct. That's the way you're thinking now is exactly the right way. But the market doesn't know that. And if you're looking at Toll Brothers, it is a nice move up 256 at 120.92. Not yet great action, and it's already at a leg D, probably a peak D today in the weekly chart. So I'm going to say to you, why don't you start your position and consider that it is exactly that. It is a starter position, a test case, because we need to go through maybe to Wednesday, and if all of a sudden it really does look like rates are going to come down, we can get these the high flyers like a Robin Hood, which I was warning about as being pretty toppy here. Right here, Robin Hood, even though we've been long since 16 and it held, we've got a position still there, and it went to 113. I said, I'm watching this closely because if it arches over, makes the dreaded H pattern, that's a problem. And it's kind of doing that. And if you look at GE, this is still holding pretty darn well, down 4.88 at 266 after making an all-time high. Yesterday at 274.94. That's why I'm saying that I have to look at this in terms of rotation. So I'm thinking that you have a really good point, and therefore I would like you to start your position, but please, you have to have some kind of a stop. So you're getting in at 60, right now at 61.06. Because it's a starter position, I would split the stop on this as the first stop is the low that was made today of so it had a round number 62 high. I don't like that. 58.62 is the low today. So 60, you've got 62 and goes down to 50. So 61 right now, 61.03. I'm saying you could just start a position, just a small starter position. Yes. If you're prepared to do that, you can start your position. The day's young, and we're getting to this just over the 10:20 time frame, Eastern time frame. Now you've seen buying coming in. Look, the E-minis already had a very nice rally. It's gone to peak C, peak D, and a peak E, and it's still holding the 914. But the 5-minute chart still has to change. This is still very early in the day, down 97 in the futures. So I'm just going to say to you, as an experiment, to be able to get in early if this is really going to move up, because the 200-period moving average of 78 would be a monthly target if it's really going to push, and it can get anywhere into the 65 to 66 area next week. It's going to be tough. Start your position. Just a small position. That's all. Small position, and I'd have a split stop. One stop would be maybe, I don't want to see a pullback from here, so maybe 59.80. And another one that you're just monitoring is that 58.62 was the low of the day. I would not like to see it take out the low of the day. And if you can survive today, you've got to realize that over the weekend, If this market closes terribly, anything can happen Monday. Anything. So have it a position that you're prepared that there could even be a gap below your stop on Monday, because this is a really hairy market right now. But I love your thinking. Yes, nail is exactly what you'd be looking for, but the other areas, like, in fact, the materials should be part of the game, and it's not. It's the builders, and that's hope, because we don't know yet whether the builders really will prevail in this particular move. So I hope that's an elaborate thinking, but I hope it helps you. And I'm pleased that we got to it, because it's part of what I wanted to do today was to have a quick glance at the HGX to see how is that holding up. And it's doing quite nicely right now. The 9 is still strong over the 14 at 679. Good. Okay, so we got that out the way. Now I want to go to gold. Gold is up 51. That's a nice move, but you really need to see next week gold at not 33.99 as it is right now. You want to see gold moving higher almost every day, getting to the 34.28 area. That's really needed to say. That's a trend change. But the weekly chart says, hey, we're just stuck in the sideways movement. What are you getting excited about? And look at that dollar. I'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
So I had a question about CLF. And I mentioned to Peaky the other day, give me a yell when it gets to this particular level. So this is Cleveland Cliffs. You're looking at the SLX, which is the Van Eck Vector Steel Index, having a huge leg in the monthly chart, fading to break the 75 round number high from December. It went to 70, around about 70, what was it, 74.25, peak G in the daily, a leg E, and it's definitely going to be a peak E today. So that's the composite. In other words, this is with the steel stocks that they have there. So if you look at this, here's your leg A, the failure so far in the on the candle itself, fell from the start of the month to the end of the month. But look at this. The 9 is still strong over the 14 in the weekly chart. The MACD is still fabulous. Stochastics at 89%. On-balance volume is very weak. That's the weekly chart. The daily chart, everything's bad, but the on-balance volume is really at a potential low. So let's go back to CLF, and we're looking at CLF trading down 39 cents at 10.13. So I agree with you that this is the level that I was looking at. 200-period moving average is testing it right now. This could be a perfect time to be buying it, and it could turn out to be a great move because it's a cyclical in the steel index, rolled steel. But I'm going to suggest, based on the evidence I'm looking at right now, which says you're on the way down, but you haven't shown any sign of strength, I'm going to say, let's keep it on the list, and I'll put it in here for next week. But for now, all I'm saying is, question mark. It's acting pretty well considering what's going on, but I don't think I'd be a buyer right now. A little bit different to Nail. Nail, we've got a story there. Cleveland Cliffs, we don't have a story. If you're looking at Nucor, N-U-E, trading also in a leg D in the weekly chart, maybe a peak D already. I think it could be. No, it's already a peak D. No, it's a leg D. In the weekly chart, a peak D, and the daily chart. Oh, I drew this in. Oh, I can't believe it. I drew this in for Nucor. Look, there it is. Let me make that bigger. This is the Chapman wave methodology where you go to the Chapman wave flat base, the unconventional flat base restart. There it is. And I said it should come back to this level right here. What was the low? The low was 135.60. It did that the other day. It broke it after the peak D. It did have a bounce, and now it's pulling back, holding pretty well when you think about it. This is Nucor. So this one fulfilled its duty, what it's supposed to do if it's going to behave in this Chapman wave unconventional flat-based restart methodology. I usually make that pink. I wonder why I didn't. That's why I didn't see it. Okay, so I'm just going to say it's a really good, I love the analysis in the sense that it's holding some support, but this turn down is only just, this for some of these stocks, today is the first day that they're actually on the way down. Look at this. You've got Microsoft, made a fantastic all-time high. Microsoft is still along some from 338. It went to 555.45 yesterday. Now you can say it's a peak F, filling the gap. But still, I mean, the weekly chart's fantastic. So I can't say everything's, this is it. This is it. This is the big move down. But before I do this, so Cleveland Cliffs, hold off, right? Other one that I need to do before I forget is Roblox. It's that, no, it was RKLB. What the heck was that? Oh, there you are, Rocket Lab. I always remember the symbols, not always think. Now look at this. This is down 61 cents at 45.31. And it's a leg B in the monthly. It's a peak D in the weekly. And it made a peak E in the daily. And it's just a steady lower lows and lower highs. So the question was yesterday, and I only saw it after my show, is this a time to start a position? And I'm going to suggest this is a really look from the low today of 42.31. It's up 3 points. That's a little different So I'm going to say in this particular case, I'm going to say you've got to be careful, but you've already got a position. I think you wanted to add to the position. If you added to the position from much lower down, I'd say now you could do a little bit at 45.35. But this one, I would have at least the 9-period moving average is still way over the 14. So I'd have a stop 45.30. I'd have like a 1 point stop. You get stopped out, it means that it's probably going to try to test today's low. But if it actually on Monday closes above the green 9-period moving average, which is at 45.90, and right now you're at 45.38, that'll be good. So in that particular instance, I'm going to say Rocket Labs, you can start a position. And if you're already in. Now, if you aren't in at all, it's very different. I would say a much smaller position just to get your foot in the door, because if this is going to make that pattern that I call the falling axe, and then it takes out, in the next week, it takes out the high of 47.72 that was made just yesterday. That means it's got a cup formation forming. I just think it's going to be really tough. So if it's a new position, I personally would say hold off for a day. Let's see what happens Monday. I'd feel more comfortable buying it a little higher than if it starts to pull back from here. All right, next question came in. KOE bouncing off the daily. Yeah, thank you. Okay, so this is the area I was going to look at, and you beat me to it. XLB, XLF, which is the financials, huge move down from a peak E with an arch formation and a peak C in the weekly up against the inside track repellent zone, the S&P Select Financial Spider Fund. Now we want to see, are the regionals holding well? So that made a peak D, and then it went to a peak E. I forgot to I think I did, and then because I lost the data, I didn't update there. Peak E right there. I'm going to say no. This is not the time to get into the financials, and especially if the yields are going down, because you remember, with the yields were steady but slightly higher, and then steady and slightly higher, that really helped the financials, the banks. For instance, we've still got Bank of America from way, way down, and we've taken some off, but this is exactly the moment where I'm thinking, all right, let's see what happens next. This is the longest we've had Bank of America. Usually every year we get in at the lows and we start to get out of the highs by whittling away. Then we've got nothing left, and then we do it again and again. We've done it maybe 5 or 6 times. So this time we've had it, and this big pullback we actually held because we were in at a level that didn't take us out. So I'm just saying I'd be careful. All right, the answer is there I would not. And IWM, there I would not. Why? Because the IWM went right to the 200-period moving average of 212. It's trying to bounce right now. It is a peak D in the weekly chart, but keep this on your radar, because if there is a rotation, because some of these really fantastic moves in many of these stocks that were at highs and then went to even higher highs with the earnings, let's see if they take a big breather, and then it gives room for the others to move up. Be careful. That's what I'm saying. I'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. an amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn. And he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
People in the den must have seen me doing this live. So you remember I was talking about the Chapman flat base, unconventional flat base restart. A restart is when you go off a low and then you can like make a peak A and then it pulls back, then you make an A and a B and then it pulls back. It just doesn't get traction, but it does not take out the left side low. Instead, what happens is when it breaks out, it's really tough. So what I drew in here was the Chapman unconventional flat base restart, because you had an instant restart within 2 bars, you went to a higher high after D. So now I can, even though it went lower down after that trough from D, I've got it E/A, F/B. Maybe I should make this a little wider and you can see what I'm talking. I don't know if this is going to work, but I've done it, and it's exactly the technique. That's why I want to do a live session to show you these techniques as it's moving. Look, so I did a left side, right side price time match saying G/C, there's never an H. That has to be a D. So I put now a down arrow, and look what happens. This is my target. Unconventional flat base restart to 62.70, and I drew that in when we were up there. I don't know if it's going to hit, but we've already gone down to, oops, let's see where we've gone down to. Could be a bounce at any moment. Look, the low so far is 71.75 in the futures. So we'll see if in this time, and I did a left side, right side price time match to a certain, actually I should have done it to this bar right here. Okay, I should have done it to that bar. Let me just do this. I was doing it very quickly. So let's do that. I have no idea if it's going to work, but this is the technique. You put it in, and you've got to be aware of it. Look at that. Come on, click. There it is. Got the click, make it pink, and we'll see if it hits right there. From that doji cat. Look at that. Right there. It took me time because I have to use the mouse and everything. Where did we go? So far, it's not there. Yep, it's at 62.70. Boom. Okay, that was the target. So that's the technique. This is live. I mean, there's nothing young. Who knew? The 9-period moving average was great. The MACD was still great as I was typing. And yet this particular instant restart technique gave you this particular information. So this is what I would like to do. So I'm going to have a webinar very soon. The webinar is going to go through some of these techniques in fixed time. In other words, it'll be, maybe the market might be live at the time, but that's not the issue. That would be, this is to show the techniques that we've used so pretty successfully in our opening call newsletter. And then I want to do it live. So maybe the following week or something like that, I'll have a session maybe from 8 in the morning till noon. Who knows? I'm not sure yet. So, okay. So the questions have still come in. And the question is a market downturn doesn't mean bad for all stocks. Absolutely not. And that's why I was looking at different things. For instance, where did it go? Yes. So we're looking at this, and maybe there's a rotation, but we're looking at Rocket Labs, RKLB. So that's in a completely different sector, holding quite nicely. And look at the monthly chart, still good. And it doesn't show from the pullback here. This is a very natural dreaded H pattern. Oh, another technique that I love, dreaded H. We've seen that. It's one of the reasons why I was looking at the Dow and said, oh, dreaded H pattern. Look, straight up, straight down. Number one is one technique. Number two is a cup formation or a V-shaped formation. Number three is an arch formation or inverted V, a pyramid. A mix of 1 and 2 or 1 and 3. This is the dreaded H, where it goes down, rallies to peak A or a B, and then it fails by going back. And does it hold above the left side low? Does it touch it, or does it go under it? There are techniques involved. So here, within 2 bars after breaking the left side low, that's the first one, it went above. And that says now you've got some strength, because if it can go at any point above this particular arch right here, which is on the 24th of July, 49.62. That's a big ask, but that's the technique that says if you show that kind of strength, that's really positive. And that's why I'm saying if it just slightly goes above this high of yesterday, that's the start of maybe a cup formation. So those are the techniques I like to look at. Okay, now what's the time? Oh my goodness, too much time. Did that. I wrote down this. I wanted to look at AAP. Yes. So here's another question that I have just for myself. Look at the dollar. I had the dollar as a target of the 99, this high right here, 99, above 99. Wow, it's soared above. And now it's pulling back sharply down $1.17 at 98.86. Well, if you put this together with the EUR, USD, this is the euro-dollar currency pair, that's a big, strong move from that peak D. In the daily chart, that's a nice move. Look at the USD JPY. It should be following the dollar in trend, not in pattern or anything like that. Well, yes, it did. There's your A, B, C, and this is a D right here, a leg D today, because it didn't make a lower high yet. So I'm looking at all of these things, and I'm saying this is one of the most complex moments we've seen in quite a long time. We had the IWM for a while now, the Russell 2000 stalling. Look, it made a peak D, but it got underneath that big cluster. And I said, it's got to break that out. And I had a left side, right side price time match to last week, and it never got there. So this means that this is one of the cases where the acceleration to the upside and the selling is forcing fund managers to take profits where they can. And that says that even the areas that are good, could see some selling pressure. So I just want to see downward revision, but the 253,000 downward revision to payoffs, payrolls, of course, is the largest since at least 1979, other than April 2020. Yeah, this is the worst economic jobs report since the end of the pandemic. CNN. All right, well, can't believe them. Okay, so with that said, IWM, I didn't do that. I said, look at the IWM, look at the double tops, these 226.05 back in early July, and then 3/4 of the way through of July, it goes to 226.74. I said that double top, if it takes out this left side low of the cup, watch out. Well, today we did that, so watch out. So I'm just saying to you, there's every reason to be very careful going long and very selectively. I'm not saying don't go long. If you find something and it's working, that's fine. Today's the day, the test. For instance, Bitcoin. I've been saying sideways, sideways, sideways. If it takes out the left side low of the rectangle, that is a problem. Remember the rectangle formation in the Chapman methodology? I spoke about it here. Look, the long, narrow rectangle. This is the long, narrow rectangle. What happens if it takes out the halfway marker after getting to the top? You've got to be careful. And lo and behold, today it's down 1555 at 115,880. So these are patterns that repeat over and over and over. So I'm saying this is a time to be very careful. One of the reasons why we managed to pick the exact day of the high of the S&P to go short is because not only was it a leg E in the Chapman methodology, but I was seeing whether or not there'd be a deflection, which there was at that peak D of the MACD. And then I said, we still won't know until the 9 and the 14-period moving averages go in a direction down together enough to say, wow, we're maybe in a bar or two close to going negative, and they're still positive. I'll be back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Yeah, so just real quickly, look how it went right through that support level after the Chapman Wave unconventional fact-based restarts. As I say, this is what I'd like to do live at some point. Session, but I need to do my a webinar just for subscribers to go through all the techniques again and review. So look at another question came in here. What about CTAS? CTAS, which I always use as a market, a kind of a benchmark. So uniforms, rentals, made a peak, a double top at 228.12. November of 2024, slumps down to the 180 level and goes right back to within a point and a quarter, 229.24 a couple of weeks ago, and now it's pulling. Just be careful. I've got this as a D in the monthly chart. Another question came in-house, which is what I've followed for a while for my subscribers. I mentioned it recently in my webinar. Look, it went to a peak E at $5.25. Now, look at that pullback. So I'm just saying be careful. So I did say just maybe start a position in now. If you haven't done it, I just say, in a market like this, don't be in a rush. If it goes up, I'll say next week. Now it's showing some strength. Just be careful. Be careful with longs. I'd be careful. So just a real sum up before you go to Steve Rhodes. I've got all the indications that this initial sell-off should be one of Joe Granville's kind of a 90% pullback initially. I don't see this as one of the big ones. I just see this as very overbought. It needed to consolidate. It's doing that. The 43,000 is going to be really important support because 42,390 is the Dow's 200 period moving average. Let's just go one step at a time. We don't even know how we're going to close. If it's very weak by 3 o'clock today, believe me, I don't think they'll be buying into the close. Look at this. This is exactly what you want to see in a consolidation. Look at that wonderful leg C in the weekly chart. I just say, hold off getting any new longs. We're doing that right now. We've got our short positions. Let it play out and just feel comfortable that you've done the right thing. You're trying to protect your money. We've lightened up a great deal. We took even more off our good longs today. Hey, that's the way you should do. Be comfortable with your positions. That's the most important thing. Check out